Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 27th of April. We've seen the FTSE fall back a little bit. So we had our levels around 78.20 as possible support. That was the February resistance line that then obviously becomes new support, or alternatively, if things got really hairy, down to 77.70 at the 50-day moving average. So far, we've had support come in above 78.20, 78.25 yesterday, 78.29 today. So the charting so far working reasonably well. Still looking for an end-of-day close above 79.30 to give us 80.47. And then up to 82.50 at the top of that rising trend channel from September as soon as the end of next month. Still obviously the risk of 78.20 breaking and then 77.70 after that. But at the moment, with the RSI in the upper 50s, around 57, that's the right area, and probably one of the strongest areas in the RSI range for the market to hold. But obviously, we'll see if the market obeys that particular rule. Moving on to the DAX, and here 15,700 seems to be set in stone quite well here. That was February-March resistance. That's now April support, and above that we're looking for the top of that rising trend channel from September as high as 16,500 by the end of next month. Obviously, if you're looking for a trigger on that, then an end-of-day close through 15,900 would probably do the trick. RSI almost identical to the FTSE, so in the upper 50s, which is a strong place. If we do break back below 15,700, then there's the risk of a test of the 50-day moving average at 15,400. But so far, the bulls seem to be relatively safe. Moving on to the Dow, which has been the weak link in the trio of indices that we look at. Here you can see that we've got this market failing at that one-year resistance line, 34,100, which I suppose now doesn't look as though it was that surprising. Otherwise, we're looking for support to come in at the 50-day line, 33,000, and hopefully not much lower than that. We do now have the RSI below the neutral 50 level, and so there is a risk now that the 50-day moving average will break, and there will be a test of support way down at 32,600 rather, which is the 200-day moving average. But that 200-day line is rising, so that does give this market still a reasonably stable look, even though it now looks as though the 50-day line will be hit, especially as it's starting to fall. On the upside, end-of-day close through 34,100 is the level we're looking at to then give us some upside over the summer. But at the moment, it has to be admitted, that doesn't seem to be the most likely scenario. Moving on to Bitcoin, where I think last week people were praying that this market would topple over, but in fact it's done the opposite. It's bounced off the 50-day moving average, which is a decent thing to do, especially when it's rising. And we're now really looking for decent end-of-day closes above 29,000, the initial April resistance, to then give us a target as high as 34,000 at the top of that rising rising trend line there from back in July. Could still be the peak, and that 32,000, which was resistance on the way down, will then give way to a fresh leg to the downside. But while we're above that 50-day line around 27,000, the technical glass is half full, and with the RSI through neutral 50 at 54, that also helps underpin sentiment. On to the stocks, and actually starting off with a blue chip company, just for a change, just because I noticed that Barclays was one of the big rises today. A horrible chart on the way down from February, gapping down. A bit of jiggery-pokery last month, but the gap fill buy signal there around the £1.40 level worked, so that end of day close above that gap down worked as a buy signal and gave us, if we were in there, around 15-20 pence. Current situation is that we've gapped through the 50-day moving average, and gapping through the 50-day line when it's falling is pretty impressive. We've actually got the 200-day moving average rising, so an end-of-day close above that 200-day line, £1.61 plus, could then give us a retest of the February resistance on the way down around 175 plus, even up to that £1.80 target at that February resistance line projection. The good thing here, though, is that if everything goes pear-shaped and there's an end-of-day close back below the 50-day moving average at £1.56, then one is not risking too much, but you're, I suppose, risking around 5 pence or 6 pence in order to try and make 20 pence on that. The other reason for mentioning the chart is that we've obviously had gaps to the downside, and then today's gap to the upside makes this an island reversal. In fact, it makes it a bear trap island reversal because we went a bit lower in March than we were back in October. So let's see if Barclays comes up with the goods. The other final plus point is the way that we bounced off the neutral RSI 50 level a couple of days ago, and that tends to be a decent continuations signal, in this case obviously to the upside. Moving on to more the usual fare here at the Bulletin Board Heroes in the form of DG Innovate. I know there's a lot of smart money looking at this company. Smart maybe in terms of being rich rather than anything else, but there we are. The old December support there around 0.09 pence. We want to see an end of day close above that. We were looking for that earlier this month, but we didn't get it. But an end of day close back above 0.09. 5 or so should be enough to convince us that this time the shares will head up to the highs that we had back in February around 0.15 pence. Best case scenario here is up to 0.17 pence while we hold above 0.08, i.e. recent support for the shares. RSI is pushed above 50 again, so it may be second time lucky for the recovery here at DG. On to a stock which has been in the wars for quite some time, but looks like it may be coming back to life. We've got East Imperial, and here actually several days into a recovery above the 50-day moving average at 1.7 pence. That's rising now, so we're looking for the top of that triangle there from December as high as 2.8 pence to be hit as soon as the end of next month. And obviously if we're up there, we'll be looking for the next stage, December resistance at 3.5. But the main thing here is it does look as though the shares have finally turned around. The more time spent above that old floor there from July around the 2 pence level, the greater the chances are of a move to 3 pence and beyond for East Imperial after a long time in the wilderness. Next stock is one which seems to be flying on the fundamental front. Obviously, I'm not an expert in its area, but here we have Ensilica, pulled back from the dizzy heights that we had back in January through £1.15. But this handbrake turn in terms of the price action after today's news, with the gap back up above the 200-day moving average, the rising 200-day line at 67 pence, suggests that there should be enough gas in the tank for the shares to at least head up to the upper 70s, and if they do that, then we may be looking at up to 90 pence by the end of next month, which was old January, February support for the shares. But the key here, holding above the 200-day line, currently at 67 pence, that would give this market a decent look. Moving on to a stock which is also reviving at the moment, ExchangeXR, a nice triangle breakout here. Bullish divergence there from way back in December, so that's a long line there, which implies decent momentum could be on its way. Broken above that resistance line there from January. We're breaking above the 50-day moving average at the moment as I speak, around 3.8 pence, and at least while we're above the 3.4 pence area of that broken line there from January, looking for as high as 6.5 pence over the next 1 to 2 months. And with that bullish divergence line, that really could be possible for the shares. Stock which is new to me and new to the Bulletin Board Heroes is IXNET, which is very trendy obviously at the moment. Here we've got a nice gap off the lows through the 50-day moving average at 11 pence. We're looking for 17 pence at the top of that January broadening triangle, and hopefully we'll hit that by the end of next month, hopefully a bit sooner than that. The shares coming off a very oversold territory around the 6 RSI level, which should mean that there's a little bit of a bounce or a spring in the step of the recovery. Company which had good news and good coverage quite recently is Intelligent Ultrasound. Here we managed to hit our first target there at 11 pence, second target around 13, which was old support from last year. Above 13 now, we're looking for as high as 19 pence at that resistance line projection from January last year, and hopefully we'll hit that by the end of next month. So decent situation there, decent setup, unfilled gap to the upside off the lows, which is one of our favorite setups, largely because it tends to work in most situations. Now on to Kropz, which has already hit the resistance line I drew earlier this morning when I was preparing for this. The current situation is that above the 200-day line at 4.3 pence, we're looking for greater glories, probably up to resistance on the way down as high as 8 pence over the next 2 to 4 weeks. And the way things are going, maybe over the next 2 to 4 days. So well done to holders there. Looks like you're back in business. Onto a stock which is tentatively recovering here. We've got Light Science Technologies, and this looks interesting in the sense we've had an unfilled gap to the upside off the low yesterday, and we've also actually got bullish divergence there, so the lower lows of recent days giving a higher RSI trace, so that could work in the stock's favour. View at this stage is while above recent neckline resistance around 1.25 pence, we could see the shares maybe fill a third to a half of that massive gap down, so maybe 2 to 2.5 pence as a best case scenario target there, but we really do need to hold above 1.25, so don't get caught out if the stock just wilts after the latest bounce. Another stock which is having a second wind at the moment is Ondo InsurTech. Here we've got a V-shaped bull flag. We originally had that 11 pence target. The view at the moment is that above 11 pence we're looking for as high as the resistance line, which hopefully will appear in a second, up to 19 pence, so the upper parallel of the support line there from last year. So 19 pence perhaps as soon as the end of next month, while we hold above recent 9.5 pence support on an end of day close basis. Quite confident now, given the way that both the 50 and 200-day lines are rising, and we've got that telltale unfilled gap to the upside that we had from the couple of weeks back. That should propel the shares higher over the near term. Moving on to a stock which is being rather irritating to say the least. We've got Prospex Energy. Here we're still trying to stabilize near the 10 pence level. We had a failure at the 50-day moving average. We've come back down below the 200-day line. That's still rising there at 10.25, so all we're looking for now really is an end of day close above that, and hopefully on the second attempt at clearing the 200-day line, we would then head back to 14 pence, hopefully by the end of next month. If you're cautious, either wait for an end of day close back above the 200-day line, or given the two failures there at the 50-day line, an end of day close back above 11 pence, and that would hopefully mean that the shares finally go up and stay up. Moving on to a stock which is a new one for the Bulletin Board heroes. Here we've got RBG Holdings, and here a nice triangle reversal, a vertical move above the 50-day moving average, which is now starting to rise. So that's always a good sign. We've broken back above the old support there at 47 pence, and the longer we stay above that, the greater the chance, hopefully, of a move up to 80 pence over the next 1 to 2 months. And nice to see the shares with this sort of U-shaped reversal, which tends to be pretty strong, especially when combined with that curving up of the 50-day moving average. Just a few to go now. First one is Tertiary Minerals, which seems to be the current punter's favourite. Here, it's trying to get through the 0.19, 0.12 area. Still looking for the upside here while we're above 0.16, and the upside hopefully up to 0.32 at that December 2021 resistance line projection. But ideally, any dips towards the 200-day line, a relevant place to buy into the situation. Vast, which is doing good work, I think, consolidating in the 0.6s. We've got support there at and above the 50-day moving average around 0.59, and while we're above that, looking for as high as 0.9 pence by the end of next month, which is the top of that broadening triangle from February.